Welcome to Striking Option, the show that reveals the options you have to better navigate markets. I'm Jeff Kilberg, and I'm joined today by Bob Icino. Welcome, Bob.
Good to be here, Jeff.
Well, it's interesting to see. We have a big jobs number tomorrow. A lot of market participants are looking for that job data, but we are seeing a little bit of selling pressure today. What is your thought this week as we're seeing a little bit of anxiety come back into the market?
Yeah, I think the market is definitely looking at the trade tariff situation as we need to have some sort of resolution to it, especially given the weakness in the EU.
Well, that is interesting. The market has really been watching this trade tariff conversation. It seems like a resolution is nearing, but we have nothing tangible yet, correct?
That's definitely it, and then it continues to drag out and drag out. There's no new deadline for new tariffs, but it's still, we need a resolution, we need a result.
I think that's right. Are you ready for this first lightning round, pal?
I'm ready.
Gold losing luster. Interesting to see comments out of the ECB, strengthen the dollar. Is the Federal Reserve and the central bankers really driving the market when it's being expressed in this drop in gold?
Yeah, they definitely are. We've got the ECB slashing their GDP growth forecast, slashing their inflation forecast all the way out to 2021. So it seems like the central bank, as we saw with the Bank of Canada and the Bank of England, are working in sort of a coordinated fashion to make sure the market knows they're there.
Well, that makes a lot of sense. What type of trade exam would you approach in gold as we have seen this rejection at 1350? Now we're back under 1300, correct?
Correct, and I see the geopolitical bid has been taken out, but gold I think is going to stay range bound. So I'm selling the 1270 week 3 March put for about $160, and I'm buying the 1250 week 3 March 15 put for about $30. The selling of this put spread allows an investor to collect $130. This $20 put spread expires week 3 March 15th.
All right, so the break-even point is about 1268. Remember, the futures were trading in April around 1287 in the underlying gold contract, and the at-the-money volatility was 942, just under 10, Bob.
Yeah, and definitely, since the central banks are being coordinated, it still puts the Fed in the strongest position, so it keeps the dollar stronger, keeps gold weak.
Great point. And please remember, these are trade examples, not trade recommendations. Are you ready for the second lightning round?
I am ready.
Trade tariff deal near. Wow, that is a big question mark, Bob. What are your thoughts as we really need a deal and at least have the sentiment change? And it's not only the domestic, it's a global market looking for this U.S.-Chinese trade deal to come to some type of resolution, correct?
Yeah, you know, at the risk of sounding like a broken record, we need that resolution. We need to be able to look at the deal and see what they're doing going forward and what it's going to mean for earnings going forward.
And I think the market today is taking a little bit of a breather, maybe a little anxiety being re-injected into the market as we don't have something tangible. So in this situation, the trade example I want to utilize in the E-mini S&P 500 is buying a put spread. We talk all the time, are we selling spreads, are we buying spread? Here I want to define my risk. I want to buy the E-mini 2725 March 15th put. It's going to cost about $700, but I also want to sell that 2700 March put for about $480, which I'll collect. Therefore, this trade, which expires on March 15th, it's going to cost about $220. Therefore, there is some risk mitigation in place in the event we see continued consolidation.
Yeah, this trade expires the same day as the gold trade. The futures underlying, when we price this, it's important to note, was at 27.49 spot 50, at the money volatility at about 14 spot 55, and the break-even point for this trade, 27.19 spot 69.
Well, Bob, we'll all be waiting to see that jobs number tomorrow, but I want to thank you for coming on and striking options today. And please remember, tune in every week as we will continue to strike options.